All right, so this is how ICT power of three looks like. Okay. Let's assume this is any time frame candlestick. Okay, this is the bullish, this is the bearish. Then price open, trade lower before expand to the upside. Okay. Then price open, trade higher before expand to the downside. Bullish scenario, bearish scenario. So now one thing I've discovered is that a lot of us, or many of us, majority of us watching me right now, only make use of ICT power of three when it comes to daily time frame. For example, I'm on daily time frame right now. You guys make use of it only on daily time frame. Price open, trade higher, then drop to the downside. Price open, trade higher, then drop to the downside. Or maybe some of you still use it on weekly time frame or monthly time frame. But in this video, I want to show you guys how you can apply power of three to everything you are doing in the market. Now, most especially for entry techniques. For example, this is a typical candlestick, all right? So price open, trade lower, then come back for, this is a bullish entry scenario. Of course, this is a bullish entry scenario. So we are using this low of this candle for our entry, okay? Now we are going to do this kind of task majorly on lower time frame. Let's say 4 hour, 1 hour, 30 minutes, 15 minutes. But before we get to this lower time frame, I need to explain basically how power of three actually work. Okay. Now, when it comes to power of three, this is something I want you guys to make sure you understand. Power of three is like ICT turtle soup. What it actually means is that price will seek a liquidity, then reverse. Price will seek a liquidity, then reverse. So it's like purge and reverse. I don't know if you guys have seen that ICT video in the past called purge and reverse theory. So what purge and reverse theory means is that price will seek a liquidity, then reverse. Price will seek a that's purge. It means price will purge the liquidity, then reverse. That is the whole drama behind power of three. So price will come back, purge out liquidity, then reverse, purge out liquidity, then reverse. That is this whole drama. That is this whole diagram you are seeing here. Now, when it depends on how you guys want to use it. For example, if you are using it on the daily time frame, if you want to do it with daily power of three, this liquidity that price will seek is Asia range liquidity. That is this kind of diagram you guys are seeing here. So price will purge out Asia range liquidity. This is a bullish scenario, then reverse to the upside. It's the same thing as just exactly what you are seeing here, purge and reverse. Okay, so this is daily time frame. Okay, when you break it down on lower time frame. Okay, this is daily candlestick. Then price seek at Asia range liquidity, then revert to the upside. Then the same thing for bearish scenario, price will seek at Asia range liquidity, then revert to the upside. So this is a purge and reverse theory. This, it doesn't just stop there on daily time frame. It can also be applied to weekly time frame. Okay, but on weekly time frame, the liquidities are the trading days. For example, you see I have here Monday, Tuesday, Wednesday, Thursday, Friday. Okay, so these are the trading days. Now, if price want to continue this current week or any week price action, let's assume this was previous week price action, then price will have to seek out this Friday liquidity. Okay, so let's just assume the week is a bullish week price action. What that actually means is that price will seek out this Friday sell side liquidity, then reverse. Let's assume this is how price close for the week. Okay, how price close for the week, right? Then this is the sell side liquidity. Then the coming week, because it's a bullish week, right? So the coming week, price will do us something like this. Seek out this sell side liquidity either on Monday or Tuesday, then revert to the upside. So one of the things you guys need to understand is that whenever price seek any liquidity level, there's high momentum for a reversal in the market. I created a video about ICT turtle soup in the past, and I was showing you guys how powerful that strategy is, because whenever price take out any point of liquidity, there's going to be a great momentum for price to reverse to the opposite direction. Now, let's come back to how to use this thing on lower time frame for our entries. Okay, for example, on 4 hour, on 1 hour, 30 minutes, on 15 minutes time frame. So I'm going to start with 4 hour time frame. But I want you guys to remember one thing when it comes to ICT power of three. Okay, like as I told you guys, what you need to understand about ICT power of three is just something this thing you are seeing here, purge and revert theory. So price will purge out liquidity, revert, purge out liquidity, revert. That is this image you are seeing here, this candlestick that looks like, because anytime any of you see this kind of thing, the only thing that comes to your mind is daily time frame candle, which is very, very much correct, because that is the time frame ICT used to narrate ICT power of three. Okay, but I'm trying to let you know now that this thing you are seeing here is purge and revert theory. So we are going to take this purge and revert theory to 4 hour time frame, to 1 hour time frame, and then 30 minutes time frame. Now, when it comes to 4 hour time frame, before I go to the charts to show you guys example, now I want you guys to understand. Well, number one thing is we need to know the liquidity level price we want to seek. Then number two is where we want to use for our entry. Okay. Now, this current chart that I'm working with is 4 hour time frame, E-mini S&P 500. Now, every candlestick we are seeing here is 4 hour interval. Okay. Now, we want to work with this 4 hour as our time frame for entry. All right. I remember what I told you guys. Power of trading means purge and revert theory. Okay. So what we need to understand is this 4 hour time frame, which of the liquidity price need to seek before we use it for our entry. Now, I want you guys to understand one thing. Every of the session in the market, for example, Asia, London, New York, this time frame, especially the key zone of this time frame, they are usually 4 hour candle. For example, if I turn on this my indicator that shows me my key zone, the yellow ones is the London session, the green one is the Asia session, New York session. So if you take a look at what I have on my screen, you observe that it's just 4 hour candles each. So this London key zone is 4 hour, New York key zone 4 hour candle. So one candle, you can see one candle, one candle, one candle, one candle. It's just like that, one candle, one candle. So each of these candles are London key zone or New York key zone. London key zone, New York key zone. It's just like that. Now, if you want to trade London or New York key zone, where is our liquidity? That is number one thing you need to understand before using it as your entry. Now, for me, if I want to trade London's key zone, my liquidity level is going to be Asia session. Okay, so meaning price need to seek liquidity levels of Asia highs, Asia low, then for me to trade London session. For example, let's use this particular day as example. This particular day as example, you see price come back. It's a bullish day. It's a bullish candle on 4 hour time frame. So price took out everything that took place in Asia session. That is here, okay? Everything that took place here. So price took out the liquidity. That is what you are seeing here. This wick to the downside. So let me turn this off so that you see the wick. You see this wick right here is where price used to take out the sell side liquidity, and then the price reverse. That is for you if you are trading London session. I'm going to give you guys example of New York key zone. Just pay attention. Let's finish London key zone first of all. Okay. So let's take a look at the previous day, this current day. This is the London key zone. Is the 4 hour candle. So this is our time frame we are going to use for our entry. So let me just turn off this indicator. You see very well. You see how this week went to the upside. Are you seeing it very well? So if I turn the indicator bar, you discover this is London key zone. And then if the wick go to the upside, remember it need to seek liquidity before the reversal. That is the purge and revert I told you guys about. So this is Asia session. Of course, you guys know this is Asia session. Everything that took place here is Asia session. Now take a look at what price did. Price purge out Asia session and then dip to the downside. Now let's take a look at the previous day again. It's like it's happening almost every day. You can see it almost every day. It's almost every day. Price purge to the upside and then reverse. So the thing right there is, if you are dealing with ICT power of 3, let's assume on any time frame, what you need to know is where is the level of liquidity that price need to seek, then where is my entry level. Okay, for example, now this place that after price took at this level of liquidity, if we should go to the left hand side, you will see that there's a PD array at the left hand side for your entry level. And that is this other block right here. Maybe I didn't measure it during the period of explanation, but it's very, very important that you highlight a PD array for your entry. You can see this is the other block. Now, this 4 hour scenario can also be repeated on 1 hour time frame. Now, you remember what I told you guys during the explanation? I said 2 things that are important when you are dealing with ICT power of 3. Number 1, which is the most important one, is your levels of liquidity. Very, very important. Then number 2 is your level of entry. Okay, so what you can do with 1 hour time frame is always mark out the previous candles high or previous candles low, because most times if price want to reverse, there's high probability that it must take out previous candles high or previous candles low on 1 hour time frame or lower time frame, maybe 30 minutes, 15 minutes. For example, you can see what happened here. Price just came back, took out this low of this previous candle and then reverse. So if there's going to be a reversal, because definitely power of 3 means reversal. Okay, if there's going to be a reversal, there must certainly be a draw liquidity that price must seek into, and then reverse to the opposite side. I just want you guys to, go back to your chart, practice this thing, back test it. You guys put it into work. You'll see that power of 3 is applicable to almost every time frame, most especially lower time frame and higher time frame.